Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi mining community, welcome back to another episode of the Dig Deep, the mining podcast. And today's guests are Dave Mitchell and David Van Kleeck of PJKT72, who are transforming the mining industry through blockchain tokenization and redefining resource ownership through blockchain tokenization. We're diving into conversation at the intersection of blockchain and the natural world, where two pioneers aiming to reshape how we value, protect, and access the planet's raw materials. During this podcast, we're going to discuss what inspired the creation of MetWave and how it's targeting real-world problems in mining and energy, the difference between MetWave Green and MetWave Black, and how the dual token model can transform environmental protection and investment, what it really means to tokenize coal in situ, and why that's fundamentally different from traditional resource ownership, and whether this model can extend to other critical materials like lithium, rare earths, and even natural gas. So, David and David, both welcome to the podcast. How are you doing?
Great, thank you.
Doing great. Thanks, Rob.
Great. As we always start these podcasts off, I wonder if you can just tell us a little bit about your career, what you've done in the industry, and obviously how you came to obviously form the company. So I'll start with Dave Mitchell first of all.
So thanks, Rob. My background's actually in manufacturing over the past decade, doing development of products, custom design through industrial design platforms. We've also, I was focused on carbon credits as I started segueing out of that and started getting into carbon credits in the form of forestry and sequestration. And so as I started diving more into that, I started seeing, what that market entailed and how it was evolving. And so working in that arena, that kind of led me to where I am today in what we're doing with MetWave. And it's a unique journey in how I got here, but my education is a little bit into geology. Studied out in Arizona, studying mine reclamation, things like that. So educational background is there. Has always been a fascination of mine. But this new venture is something that brings together mining and technology, which is where we're evolving.
Yeah. And David, I wonder if you can just tell us a little bit about yourself as well.
Certainly, my background is mixed. I had parallel careers in industry and with the U.S. Army. On the industry side, I was trained as a chemical engineer, did my undergraduate work at Princeton University, and my PhD at Rice University, where I specialized in experimental work involving catalysis. Following that, I had a 34-year career with Shell Oil Company, doing process development on the downstream chemical side of the business. So I have a pretty rich background in experimental and process development work. In parallel, I had an Army Reserve career that lasted 32 years, ended up retiring as a brigadier general from the Army. Subsequent to that, for the last 11 years, I've been teaching 2 leadership courses at Rice University here in Houston, leading to a certificate in engineering leadership for our undergraduates. Most of my students are freshmen and sophomores, and I give them the introductory courses in the curriculum leading to that academic certificate.
Dave, I wondered if you can just tell us, give us a snapshot of the company, PJKT72, and I suppose also how you came up with that name.
So that's actually each one's a value in a mass supply chain, but it's an acronym for Project 72. Project 72 is the parent company of MetWave and Apex 36. Actually, parent is probably the wrong term. Project 72 is the single member owner of the other two. So that's a better way of saying that. But each company has its own particular function. Project 72 is the technology, environmental technology and development arm of the latter. The MetWave LLC is particularly aligned to mining, specifically in this particular situation, coal mining in Alabama, where we have a pilot plant that pilot mine that we're creating a pilot plant concept for our other technologies that we're looking to utilize in that location. The idea is that we are looking to develop new ways of handling both supply chain, finance, and ESG type platforms to be able to give not only mine owners, but individuals, whether they be professional investors to steel brokers to just your general public, a seat at the table to both be able to extract coal and to be able to keep it in situ for potential to upcycle to carbon credits or to a higher valued material that would be something like graphite or graphene, which is tied to another project that we're working on. The Apex 36, it's real straightforward. It's a company that has been set up specifically to explore natural gas, coal bed methane, oil in deep well application in a particular tract in that mine. So that company is looking to develop those resources, potentially converting coal bed methane into energy that can be used for a number of things, but one of those is backing up places like TVA that are looking for natural resources to back up their power production in that region.
What inspired the creation of MetWave Token, and how does it solve real-world challenges in the mining and energy sectors?
So the way it got started was not specifically due to the mine. The way it got started was I was looking into payment systems and royalty systems that we could implement for our carbon conversion technology that would be placed at the mine level. In that process, I was looking to create a blockchain technology that could look at the production, how it's traced across the supply chain, how much is being produced, what the quality was. All of these different factors were going to come in play as we were starting to develop that. And so as I started looking into that, I started realizing that this would be valuable across the board for coal mining in general. The idea that you could move that first concept into global supply chain just made sense in the respect that it creates verifiable, transparent transactions that are instantly paid and are programmable that can both speed up the supply chain, speed up the traceability, and also be able to verify at multiple places along that path of what you're actually dealing with. So that's where I first got started with it.
And as that developed, we began to realize, based on David's prior experience with carbon credits, that there is a possibility to include the environmental community in what we're doing and give them a voice through the green token. The green token is an opportunity to leave the coal in place, and it has a very clear, direct, calculable relationship between the carbon in that coal and the CO2 that would be produced if it were burned. So we feel that giving the world really an opportunity to have a vote in how carbon is emitted into the atmosphere provides a voice that hasn't existed before, and we wanted to provide that opportunity.
Can you explain the difference between the MetWave Green and the MetWave Black tokens, and how each fits in with the broader strategy?
Sure. So the Black token is an opportunity to provide ownership of coal, fractionalized ownership of the coal from the individual investor through corporate and large, potentially venture capitalist investments in coal itself that would be produced. Those tokens could be held and then converted into actual coal production and would be the start of our blockchain for coal supply. The other side is the green token. The green token is intended to represent each token is a ton of coal that will remain in situ, in the ground, not produced. That amount would be kept in a ledger, and we would create a trust for those green tokens to reside in that would last for 10, 20, 30 years as a commitment not to produce that coal. And as we further develop the blockchain around the green token, we want to be able to upscale that to carbon credits because of that connection between the amount of carbon and the CO2 that it could produce once it's used. Companies that need carbon credits for their sustainability programs might be able to then to purchase those carbon credits and help, predominantly provide for their sustainability efforts in their production through leaving that coal in the ground.
How do blockchain and smart contracts enforce environmental protection, particularly with the concept of non-extraction with MetWave Green?
Well, as I said, with the MetWave Green token, we set up a trust. It's a commitment, a legal commitment. The smart contracts in the blockchain would enforce that. That is a very transparent, permanent record of the transactions that are done. Through the known reserves of coal that we have, we can account for the amounts that are set aside to remain in situ and track those over time as those tokens are either purchased, exchanged, or, quote, burned in the process of exchanging them for potentially upgrading that in-situ coal to a higher value. So we want to build in those opportunities into the green token.
What does it mean to tokenize coal in situ, and how does that differ from traditional commodity trading or mineral rights ownership?
So to tokenize it in situ is what you're doing is offering a fractional ownership of that particular mineral or mine in and of itself. The idea is that by offering that fractional ownership, you're able to raise capital as a mining company. You're able to raise capital for different projects. You can raise capital to get a mine started. You could raise capital to start a coal mitigation bank for carbon credits. You can do a lot of things with fractional ownership. The interesting part is that with this fractional ownership, these smart contracts that are attached to it are actually programmable. in such that you can program in royalties, you can program in contract mining costs, you can program in a lot of different instant payments that'll happen in that process. So by tokenizing it, what it's doing is opening up opportunities that had not been available um, to both the public, private investors, manufacturers, and mining companies, and even royalty, landowners for royalty payments, for them to be able to set up instant transactions that can be done upon the sale of these tokens. Ours are directly linked to a fractional ownership of the coal. So each token has a value of 1 ton of coal. And in situ, you would then have a cash discount based on that. And so the idea is that if your spot price of Met is running 186, or let's use 200 for a simple round number, you've got a value that's created at 27% of that, or 30%. You can set that value, that which you would sell that token for, which still allows room for, once that's sold to a steel company, steel manufacturer, in that scenario of metallurgical coal, it would then still have money available when it's purchased at full value to both pay for the mining operations, have a profitability, and still pay out royalties. And so that's the underlying theme of the black tokens. Green tokens are a different animal altogether, but the way those work as far as fractional ownership is still similar in concept.
How might your dual token model reshape mining finance and open access to previously exclusive natural resources?
So the way that this is going to help is that, as I was just talking about, the idea that fractionalizing an asset, a real world asset, what that's going to be able to do is provide the mining company with opportunities they did not have prior. They would have to either take out banknotes or self-fund or find a way to pre-sell, and then they're behind the 8 ball trying to get ahead. In this scenario, you can have a fractional ownership being sold in situ, which allows you to have an upfront investment that will get your mine cash flowing, which will then allow you to develop potentially other technologies, bring in other technologies that will help you, whether it be in rare earths, whether it be in carbon conversion into graphite, graphene, things like this, or even start looking for other minerals that you might not have had the opportunity to do prior, or even gas. How you handle that, being able to have the funds to develop plants on site to be able to start selling that back to the community. Things like this give opportunity to do those things which may not have otherwise been available.
Looking ahead, do you see this blockchain tokenized model being applied to other materials like lithium or rare earths or even natural gas?
The short answer to that is yes, we see a huge opportunity for anybody willing to do that. In our particular case, the scope is really pretty much limited to graphite, graphene, and potentially some rare earth recovery from coal. We're not actively looking for other opportunities like lithium at the moment, but certainly the approach that we're taking could be more broadly applied in a variety of instances.
I mean, if there was a group that wanted to do something similar, this model would apply to that. So the answer to that is yes, you can use this model, but we're not actively going after that.
Right. And lastly, obviously this is a new technology, and obviously a lot of our listeners are from the mining industry. Just wonder if there's anything that you want to add or want to conclude, so our audience really understands a lot about obviously the tokenization and what it means for mining in the future.
Well, I think there's an opportunity here to revolutionize the way the carbon or the coal supply chain is managed. the use of smart contracts, the speed at which transactions occur, can have a huge impact on, certainly financial impact on the way that coal is mined through the way it's delivered. So there's a huge opportunity, not just for what we're doing with our own mine, but across the industry more broadly.
Great. David, thank you very much for your time. If our audience wants to reach out to you, if they've got any questions, and obviously you've been speaking about MetWave Green and MetWave Black tokens, and it's I think it's obviously innovative, and I think our audience will have some questions. So how can they go about contacting you, and what social media platform channels are you on?
Well, right now, we certainly have our website, which is PJKT72.com. There's a lot of information there about what we're about, not just the PJKT LLC, but the two others, the MetWave and the Apex 36. We also are active on X, and we also have LinkedIn profile as well.
And you can always email us directly at PJKT72@gmail as our general email, or directly you can reach me at david@project72.com. That's PJKT72.com.
Great. And all those details will be in our show notes for easy access, so our listeners can reach out to you and also follow your story, and obviously watch the company and future grow with obviously this tokenization. So thank you very much. Appreciate your time.
Thanks very much, Rob.
Have a great day.
Great. And you. Thank you for listening. Hope you enjoyed that episode. Obviously, it's quite new, so I do encourage you to check out their website and check out their social media channels, and obviously understand more about tokenization, especially if it's coming into the mining industry even more, as the future of tokenization and what it can mean for the finance of mining projects in the future. So thank you for listening. Appreciate your continued support. Please keep sharing these episodes far and wide. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.